Hey, how's it going? It's Davey Trades here. Today, I want to talk about what is accumulation and what really moves the market. So, we're going to look at today's price action, which wasn't great. Actually, we're seeing some really clean moves to the downside right now on the NASDAQ. Right, I took a little position here for a +2. Right, but what I want to talk about is what is stage one and what's an accumulation and how does the market actually move. So let's take a look at a higher time frame right now, right? So a stage one is sideways price action, right? Now sideways price action is also what I call an accumulation or a reaccumulation, right? So an accumulation would be more so at the bottom of the move. So right here, right, we have back and forth price action. Price is accumulating, right, meaning that it's come into some type of zone. Now I don't try and look for zones, right? Because zones fail all the time. If you take a look, it came down into here, and actually it went even further. It came down into here. And now we're moving back to the top side, right? Quite aggressively, actually. So my assumption is that price is just going to break through here, right? Next couple days might be a little bit choppy, right? We're probably looking for another stage one. Um, but at the bottom here, what I want to show you is we have an accumulation, right? So price is moving back and forth, and it's the beginning of a reversal, right? Now, a reaccumulation is when price comes back down against the intended trend and reaccumulates orders, right? So this is what moves the market, right? Candles are just a way for us to look at the market, but the reality is it's orders being entered in through the composite operator, who is big money, or mixed with traders like you and I, right? So this is what I call a stage one into a stage two delivery. Okay, stage one being sideways, stage two being up, stage one going sideways, stage two being up, right? So now that we know that the market moves in two stages, which is stage one, stage two, we can assume that the price action for today, which was not the greatest price action, is probably because we are heading into a stage one, right? With the assumption that we will continue to go into a stage one and stage two, right? So we got to move, probably have some kind of down move up, right? Another stage two until we break through the top side of NQ and back into all-time highs, right? So that's my assumption. But accumulations are great because that's where we look to get involved in the market, right? So if we're looking at our higher time frames, right, an hour is a higher time frame for me, may not be for you, right? We see that we're going through stage one, stage two, accumulation and reaccumulations, and our bias is bullish, right? So if we step down to my entry time frame, which is the 15-second, right? I know that some of you guys probably think that's insane, but I look at the market fractally. So price action is price action is price action. It doesn't matter where you're at. If you look at the market fractally, you will understand that 15-second is not any different from 1 minute, 2 minutes, 5 minutes, an hour. It's all the same. It's just more or less candles. Right. So now that we look at what happened at the New York Open, we had a big push up followed by a big rejection to the downside. Some of these trades in here I actually did not take. I took this one. I took this one, and I took this one. I missed this one in the beginning. It just wasn't clean enough to the like a clean enough miniature reaccumulation. But we're obviously moving in this sideways price action for the most part. But because we are scalp traders, we can look for positions within this kind of more of a choppy environment. Not too choppy, obviously. You don't want to be chopped out. But we can look for positions in this kind of back and forth environment, right? Now, my indicator, which I absolutely love, is perfect for keeping you in or out of choppy price action. Like if you can see here, right, we had a nice push to the upside. My indicator starts glowing blue, right? This is a good place to enter. I would have gotten an easy 2-to-1. Chops back down. Okay, I would consider maybe with this type of push getting into a long, because it looks like what we're going through is probably, with this volume coming into the market, probably some type of reaccumulation where we want to break through the top side. Now, we didn't get that, and my indicator stopped glowing here, so I don't take entries when I have no reason to take an entry, right? This shows me that the trend is no longer valid, right? And then we start moving to the downside, where I have a nice fractal stage 2. Well, first of all, we have a fractal stage 1, right? Into stage 2. Fractal stage 1. My assumption is that we have more room to go to the downside, right? So I entered a position here. You can see me trade it live. I have a video on it, and it was a nice, quick, easy +2. And then from that move, we went into what looked like an accumulation, right? So at this point, we've come into some zone. Again, I don't try and call zones. I don't care. I watch what price action does. We come into some zone. We get a big rejection. And my indicator keeps me out of all this price action, right? Because it's just chopping back and forth. There's no solid glowing line for me, so there's no trades to be taken, right? Again, we get a nice rejection. Now we're going into this zone, right, which is our regional accumulation here. It's clear that we're going through some type of larger stage 1, right? Well, a larger stage 1, which is part of a larger stage 1, right? If you look at the market fractally, for some moves to the top side, right? So we have our initial push, right? Comes to this area, initial push. Now look what we have. Stage 1, stage 2, stage 1, stage 2, right? So my assumption is that price probably wants us to keep going to the top side, right? Which I'm right. Stage 1, choppy environment. We don't want to be involved in this. Stage 2, right? Now that's the end of the move, right? We get a nice rejection. We are now below our EMAs. We're glowing red. Stage 1. I assume, okay, stage 2 coming up. And actually, yeah, let's call this a stage 2 here. Stage 1. And then stage 2. Right. So what I want to make clear is what we look for our entries. They're accumulations, right? Or reaccumulations. That's basically just sideways price action, right? With an intended direction, right? So we know now with this type of volume to the downside, sideways move, we can look for a short. Our indicator is showing us that we can go short. The sideways price action is showing us that we had a big rejection here and then it started moving sideways. So of course in trading anything can happen, but we assume what's the most probable outcome. When I see this type of rejection and this type of move to the downside, I don't assume, hey, this thing's going to go long again. I now assume this thing's done going long. We can move sideways and then we can look for a short, right? Again, we can move sideways and then we can look for a short. That is how I find my positions. I basically am waiting for price to show me this type of solid either blue or red line depending on the direction, and then I need some type of sideways price action. And you can look for a buy or sell stop depending on your direction. If you want to sell stop the bottom, or if you just want to market enter, you can always do that. I've been working with a little bit of tighter stops recently. Typically I would do probably about an 80 tick stop loss, but I felt okay getting away with the 40s today. But this would have been an easy one to do at 80 as well, right? Nice clean. You got a nice clean break even as soon as you break the low here, right? Wouldn't have been tapped out. But yeah, that's basically what I look for, and that's basically how the market moves. It's orders being filled, and we're just moving within two stages, right? Stage one, stage two. But because the market's fractal, you have to be able to identify exactly where we are in a stage one and a stage two, right? So we're just, looks like we're just at the end of this stage two delivery. Well, maybe not the end of the stage two delivery, but we are in a stage one right now. And my assumption is that what we're gonna do is kind of chop around, maybe a little downside, but we will continue to the top side with this move, and we'll be ready, and we'll be following it long. Anyways, that's my little lesson. I hope that's helpful on accumulations and how they work and what actually moves the markets, and that we should just be following the trend, right? We wait for price to go sideways, and we wait for it to show us some type of volume, and then we get in on the trend. Anyways, take care, guys. I'll see you in the next one.